Hello everyone, my name is Jake and welcome to Growth Academy. If you're new, please consider subscribing for more content like this one. Let's get on with the video. With $1,700 in a tax-free retirement account, Peter Thiel was ready to take on the old business world. 2 decades later, he would invest $1,700 to expand it to $5 billion today. This is the story of how Peter Thiel's money was multiplied 2.9 million times, resulting in a 294 million% gain. Think about Warren Buffett, Charlie Munger, Peter Lynch, or even Cathie Wood when you think of the world's finest investors. Nonetheless, despite being engulfed in political controversies, Peter Thiel may be the world's greatest investor. Peter was born in Frankfurt, Germany in 1967 and came to the United States with his family when he was 1 year old. He began playing chess at the age of 6, and by the age of 12, he was rated 6th in the United States in the under 13 category. He was not just a chess champion, but also a math genius and a great student. He got the top score in a statewide math competition in middle school, and when he graduated from San Mateo High School in 1985, he was also awarded Class Valedictorian. He wore a huge sticker on his chessboard equipment that read 3 words, "Born to Win," when he was still in high school. Peter Thiel, if anyone was born to win, was it. He graduated from Stanford University in 1989 with a degree in philosophy and a Juris Doctorate in 1992. After earning his JD, Thiel worked as a judicial clerk for Judge James Larry Edmondson, a well-known judge who was appointed by Ronald Reagan. He quit his position shortly after to work as a transactional lawyer at Sullivan & Cromwell. This was exceptional for his age, as he was already near the top of those with a legal career. However, Peter's career as a lawyer was short-lived. Peter described the legal practice as a place where everyone is striving to get in from the outside. On the inside, however, everyone is attempting to escape. He equated law to prison because working in law is a psychological trap. He became a derivatives trader after quitting the legal company. A derivatives trader is someone who speculates on the future pricing of assets by trading contracts. Some derivatives traders, for example, speculate on the price of oil by trading oil futures contracts this time, and while Peter felt better about it, he still felt out of place. Peter quit his job in New York in 1996 to establish his hedge fund in Menlo Park, California. He successfully raised $1 million from his friends and family at the end of his fundraising round. Soon after, his life would take an unexpected turn, and his new hedge firm was dubbed Thiel Capital. Peter met Max Levchin, a programmer from the University of Illinois, Urbana-Champaign, also known as UIUC, after launching his hedge fund. Max had the notion to establish FieldLink, a cryptography internet firm. Peter believed the concept had enormous potential and wished to join the team as a co-founder. After launching the company, hiring many employees, and making a few small modifications, FieldLink was renamed Confinity by Peter and the other co-founders. Confinity merged with X.com, another financial services firm created by Elon Musk in March of 2000. So what motivated Peter to do this? Competition is for losers, he says. The combination of Confinity and X.com marks the beginning of PayPal, which will undergo considerable upheaval in the coming years. Elon Musk, the company's president, and Bill Harris, the CEO, both disagreed on the future of financial services. As a result, Bill departed the business in May of 2000, and Elon took over as CEO. Nevertheless, things did not go well. Musk began focusing the firm on PayPal in October. Elon Musk was abruptly fired as CEO in the same month, unbeknownst to him, and was replaced by none other than Peter Thiel. As the new CEO, Peter took PayPal public in 2002, and the company was eventually bought by eBay for $1.5 billion the following year. Peter's stock enabled him to profit from the deal in the amount of $55 million. Because Peter's tax information was just released, we know that a majority of his PayPal earnings were in his Roth IRA, instantly making him a tech millionaire. A Roth IRA is a type of retirement brokerage account in which users pay taxes on their capital before depositing and then never pay taxes on their capital gains. Making use of the Roth IRA, Peter paid 1/10 cent for 1.7 million shares in PayPal. Because eBay's acquisition cost around $22 per share, he received a 22,000 times return. According to my calculations, Peter's Roth IRA was valued around $37 million after selling PayPal. While remarkable, it pales in comparison to the current value of Peter's Roth IRA, which stands at $5 billion. Following the sale of PayPal, Peter established Clarium Capital, a hedge fund. He used Clarium to research macroeconomic patterns and place big wagers on them. The fund's performance was initially outstanding. In 2002, his fund returned 29.4%. The following year, in 2003, Peter correctly predicted the dollar's demise, allowing him to earn 65.6% in his hedge fund that year. These returns continue to swing with enormous volatility, which I'll discuss shortly. Peter co-founded another business with a friend he met at Stanford Law School around a year after launching Clarium. Palantir Technologies. Palantir's business strategy was so unusual at first that no one in Silicon Valley wanted to invest in it. Peter describes the business strategy as, basically, I felt that some of the methods that PayPal had used to fight fraud might be expanded into other settings, such as battling terrorism. Peter was able to accomplish even more work while maintaining operations at Palantir and Clarium. Peter became the first investor in Facebook in August 2004 when he started a $500,000 angel investment in Facebook for 10.2% of the firm. He eventually sold 80% of his angel investment for approximately $400 million at a price of $20 per share. This cemented his skills as a successful startup investor. Peter founded Founders Fund, a venture capital fund located in San Francisco, in 2005. The Founders Fund developed over the following 6 years as a result of successful startup investments. One of them was a substantial investment in Palantir, the business he created. Clarium Capital, his hedge firm, prospered at this period. Clarium Capital returned 5.6% in 2004, then 57.1% in 2005, before dropping 7.8% the following year. Thiel had a fantastic year in 2007 as the fund returned 40.3%. In 2011, Peter missed out on a big stock market comeback, which caused significant investors to withdraw their funds. As a result, Peter was compelled to close the fund and concentrate only on managing his personal money. From 2002 through 2010, Peter earned an average annual return of 15.3%. That may not appear to be much, but it was a really excellent return. During the same period, the S&P 500 returned only 3.32% a year on average. That implies Peter outperformed the S&P 500 by about 12% every year on average, which is remarkable. Peter is unique in that he has achieved success not just in the hedge fund industry, but also in venture capital, entrepreneurship, and public equities investment. From 2010 until the present, Peter was able to significantly accelerate his capital. According to one study, investors who put $1 into the Founders Fund in 2011 would have $4.60 by the start of 2019. It's a 4.6x rise in 8 years, and that doesn't even take into account 2020 or 2021, where we've witnessed a tremendous increase in the value of financial assets across the board. Not only that, but also includes expenses, implying that Peter likely compounded considerably larger returns. Among the successful investments made by the Founders Fund include Airbnb, Slide.com, LinkedIn, Yammer, Yelp, Spotify, SpaceX, Palantir Quora, Stripe, Wish, Lyft, Twilio, Facebook, and many more. The Founders Fund is easily one of a kind, if not the best venture capital firm in the world. Let me know your thoughts in the comments below. As always, if you enjoyed this video, please hit the like button and subscribe, and I'll see you in the next one.